Good evening. Okay, as my health is not good, I cannot able to take the classes. Okay, today I'm going for the non-profit organizations and how to do the non-profit organizations. That is how to prepare the income and expenditure account from the receipts and payments account. I'm going to tell you. Okay, in the last class, we came to know about the adjustments, whatever we come across regarding the subscriptions as well as the expenses. Here in this, we have to understand that what is the problem that was given. First, you have to read, okay, the problem one to three times. Thereby, you can come to know what is given and what is to be done, okay, and what are the requirements that we will come across. When you go for income and expenditure account, mind that you have to take into account the capital fund or the balance fund. You have to observe that whether capital fund and balance fund are given or not. When capital fund and balance fund, when they are not given, you are supposed to calculate the capital fund and the capital fund or balance fund by preparing the opening balance sheet of, okay, opening balance sheet. And for preparing this opening balance sheet, you have to take into account the opening balance of assets as well as opening balance of liabilities. Thereby, the difference or balancing figure will be the capital fund or balance fund. Okay, that is the thing that we have to take into account. And when you are preparing this income and expenditure account, mind it and keep that in your mind that you have to take into account only the current year revenue items, whether they may be receipts or payments. You have to take only the current year revenue items. You should not consider the previous year or the coming year. This is the things that you have to keep in your mind when you are going for this non-profit organizations NPOs. Okay, the non-profit organizations, they are also termed as non-trading concerns. Whatever it may be, the name, okay, the procedure is one the same. And another thing that I want to tell you is, it is always better if you go for workings. It is always better if you go for workings. Thereby, you can do the problem in a very simple manner, in a very easy manner. People also, they look after whether you have done the working notes or not. Okay, so like this, you have to take into account the non-profit organizations problems. That is income and expenditure account. Okay, I'm going to read the problem and I'm going to give the solution in an understandable manner. In an understandable manner, everything I'm going to give you. Okay, the following is the receipts and payments account of Jolly Makers Club in respect of the year ending 31st March 1991. Okay, it is not 1991, sorry, it is 2005. Okay, 2004 April 1st to balance brought down 2050 rupees. 31st March 2005 to subscriptions 2004 80 rupees, 2005 4,220 rupees, and 2006 160 rupees. He had given you for 3 years, for 2004, 2005, and 2006. But you have to calculate for 2005 only the income and expenditure account. To profit on sports meeting, 2,850. Okay. To interest on investments, 2,000. To sundry receipts, 250. Total comes to 11,610. Okay, now we are going for the payment side. By salary is 4,160. By rates and taxes, 1,200. By stationery, 800. By telephone, 200. By investments, that is purchase of investments amount, 2,500. By sundry expenses, 1,850. By balance carried down, 900. Okay, so the closing balance of cash is 900. So the grand total comes to 11,610. Okay. Now we are going for the additional information. The following additional information are ascertained. Number one, stock of stationery on 1st April 2004 was 100, and on 31st March 2005, 180. This is the closing balance of stock. Rates and taxes were prepaid to the extent of 400 rupees. That is prepaid expenses. Telephone charges outstanding amounts to 75 rupees. Outstanding charges. Outstanding expenses. Next, fourth one is in 2004, subscriptions received in advance amounted to 200 for current year. That is there for 2005. Okay, we received that in 2004 only. They belongs to 2005, but they were given well in advance in 2004 only. And rupees 180 were due on 31st March 2005 for 2005. Okay, that is current year outstanding subscriptions. Next, fifth one. On March 31st, 2004, the building stood in the books at 20,000 rupees, and it is required to write off depreciation at 5%. Investments at March 31st, 2004 were 40,000 rupees. You are required to prepare income and expenditure account for the year ended 31st March 2005 and a balance sheet as on that date. Okay, now this is the problem that was given. Now, when you are given this type of problem, first of all, what you have to see is whether capital fund or balance fund was there or not. In this problem, the capital fund or the balance fund it was not given. So you have to compulsory prepare the opening balance sheet as on 1/4/2005, taking into account the opening balance of assets and opening balance of liabilities, and the difference between the assets and liabilities will give you the capital fund or balance fund. Okay, then only you have to think about income and expenditure account, and after that only you have to think about the closing balance sheet. Okay, first opening balance sheet amount. Opening balance sheet. Okay, now balance sheet as on 1/4/2004. 1/4/2004. Cash 2050 rupees. That is the opening balance of cash. Stock of stationery 100 rupees. It was given in the problem. Outstanding subscriptions 80. That is of last year. Outstanding subscriptions 80 rupees. Investments 40,000. Buildings 20,000. The grand total comes to 62,230. 62,230 on the asset side. Now coming to liability side. Subscriptions received in advance 200 rupees. It was given over there in the problem. Subscriptions received in advance 200 rupees. So here the assets are more than liabilities. So the balancing figure automatically it will become the capital fund or the balance fund. And the balance fund is 62,030 rupees. The balance fund or the capital fund is 62,030 rupees. Okay. So the preparation of opening balance sheet it was completed. Now we are going for the actual income and expenditure account for the year 31st March 2005. Here I told you that we have to take into account the revenue incomes as well as revenue expenses. You should not take into account the capital receipts or capital payments, capital expenditure, because this receipts and capital payments, whatever it may be, they'll appear only in the closing balance sheet, but they won't appear at all in the income and expenditure account. All the people you have to understand this. Now we are going for income and expenditure account for the year ended 31st March 2005. Okay, ma. Now, left side, that is on the debit side, you have to take into account the expenditure. On right hand side, you have to take into account the income. All incomes, all revenue incomes will appear on the right hand side, and all the expenses they will appear on the left hand side. That is debit side and credit side. Okay, ma. Now we are going for the incomes one by one. One thing you have to keep in mind that when you are going for non-profit organizations, apart from other incomes, apart from other incomes, the main source of income for a non-profit organization is subscriptions. Compulsory, every year we have to pay the subscriptions. Okay, whether you go for other receipts or not, whether you go for other incomes or not, but this thing is compulsory. So first of all, you have to give importance for subscription. So on the income side, by subscriptions received in the inner column, 4,220. Okay, I mean, ad received in advance last year, 200 rupees. They belong to this current year, that is 2005 only, they belong to. So you have to add that. Ad received in advance last year, 200 rupees. If you add, you will get 4,420 rupees. And again, you have to add the current year outstanding, that is 2005 outstanding subscriptions, you have to add. Add outstanding for current year, 180 rupees. So the total comes to 4,600, and this thing you have to show that in the outer column. Are you able to follow this? Yeah, 4,600 rupees, you have to show that in the outer column. Now, next, by interest on investments 2,000, by profit on sports meeting 2,850, by sundry receipts 250. These are the items that we come across on the income side. Now coming to expenditure side, to salaries 4,160, to salaries 4,160, to rent and rates inner column 1,200, less prepaid. Okay, you have to remember that prepaid expenses they are to be deducted, and outstanding expenses they are to be added. Okay, prepaid expenses you have to deduct, outstanding expenses you have to add. So less prepaid expenses 400, so the amount comes to 800 rupees, and you have to keep that in the outer column. Next, to stationery, to stationery it is 800 rupees amount. You have to keep that in the inner column, because there are I would make some adjustments regarding stationery. Plus opening stock is 100 rupees. You have to add opening stock of stationery, and you have to deduct closing stock of stationery. This is compulsory when we go for the expenditure part. Okay, to stationery 800 rupees, add opening balance 100 rupees, it comes to 900 rupees, less closing stock, less closing stock 180 rupees. So you have to show the remaining balance, that is 720 rupees, you have to show that in the outer column. To telephone charges 200 rupees in the inner column, add outstanding telephone charges 75 rupees. If you add that, you will come across 275, and you have to show that in the outer column as 275. To sundry expenses 1,850, to depreciation on building 1,000, that is building value is 20,000, on that you have to calculate 5%, it comes to 1,000 rupees, and that thing you have to show that on the expenditure side. Mind it, depreciation will not appear at all in receipts and payments account, but it must be shown compulsory, it must be shown in income and expenditure account, whatever it may be the asset, and whatever it may be the percentage of depreciation on that particular asset. Compulsory, it will come on the debit side or expenditure side. Okay, when you take into account the grand total of income side is 9,700, and the grand total it is less on expenditure side, thereby you are getting a surplus of 895 rupees. You are getting a surplus of 895 rupees. You can call that surplus or excess of income over expenditure. In any way you can call. There is no hard and strict rule that you have to call that thing as surplus. Okay, you can call excess of income over expenditure. The meaning is one the same. Some people they'll call that thing directly as to surplus, and some people they'll call that in that way. but whatever it may be, the name is one, I mean, the amount is one the same. Okay, 895 rupees. This is nothing but the surplus. And this surplus you have to take in the closing balance sheet and you have to add that to the capital fund. You have to add to the capital fund. Now we are going for the balance sheet as on 31st March 2005. Okay, that is nothing but this. This is the closing balance sheet that you will come across. And in the closing balance sheet, what are the items that we'll come across? That is what are the assets and what are the liabilities we have to see. Now, assets, closing cash balance you have to take. That is nothing but 900 rupees. Stock of stationery, 180 rupees. Closing stationery. Rates and taxes prepaid. Okay, here one thing I have to tell you is prepaid expenses will appear on the asset side and outstanding expenses will appear on the liability side. Okay, every time, whatever it may be, prepaid expenses will appear on the asset side and outstanding expenses they will appear on the liability side. So, prepaid rates and taxes, it is 400 rupees. Next, outstanding subscriptions, 180 rupees. Outstanding subscriptions, sir. Why we have to show this on the asset side? See, you have to get this subscriptions. You have yet to receive the subscriptions. That's why you have to show that as an asset on the asset side of the balance sheet. Outstanding subscriptions, 180. Next, investments, inner column, 40,000. Add purchase. Add purchase of investments, 2,500 in the inner column, and you have to add. The total comes to 42,000. I mean 42,500. Okay. When you come across any adjustment regarding interest on investments in other information, that thing will come. Suppose if you come across that interest on investments in receipts and payments account, it will have only one effect. When you come across anything as additional information or other information as a separate thing, then it will have twofold effect. Otherwise, there won't be any twofold effect. Okay, mind it, please. So it comes to 42,500, and you have to show that on the asset side of the balance sheet. Next, buildings, 20,000. Buildings, 20,000 in the inner column. Less depreciation, 1,000. And remaining 19,000, you have to show that on the outer column. So these are the various assets that we come across on 31st March 2005. Now we are going for the liability side part. Outstanding telephone charges, 75 rupees. Next, subscriptions received in advance. Subscriptions received in advance, 160 rupees. Of coming year, that is for 2006, whatever it may be, we have received subscriptions in 2005. So that thing, you have to show that on the liability side. Okay, next, capital fund in the inner column, 62,008, I mean 62,030 rupees capital fund, and you have to add the surplus 895, and the total comes to 62,925. You have to show that in the outer column. Thereby, when you add both assets and liabilities, they must show same amount. Whenever they show same amount, okay, without any differences, then we can say that the financial position of that non-profit organization is good. Okay. Now, when you go for the, I mean, grand total, it is 63,160 on both sides. So we can say the financial position of the non-profit organization is good. Okay, ma? So like this, you'll come across the problematic portion, a problem on income and expenditure account. If possible, tomorrow I'm going to continue. Okay, some more problems. Okay, thank you. Thank you very much.